So for the non-current liability section, there is a note to that. So let's check out the note. So they said that the 8% loan notes are repayable at a premium, giving them an effective rate of 10%. No loan notes were issued or redeemed during the year. So that's an information. So you guess just why there's 4,000 here and there's 4,080 here. Of course, let's amortize the loan and see what we get. So again, we do workings for that. Loan notes amortization. Amortized cost table. So we have the year opening balance. We have effective, nominal, and closing. Here we have it to be 10%, and here we have it to be 8%. The opening balance is 4 million. 10% of 4 million is 400, which is what was recognized in profit or loss. And 8% of 4 million, that should give us 320. But let me be sure. Yeah, 320. And this gives us a closing balance to be 4,380, which is the closing balance you have in the statement of financial position. Now, this is what is in the profit or loss, which is a non-cash item. The actual cash flow here is the nominal interest. Therefore, 320, you can bring it back as finance cost paid down here. Say interest paid. We have 320. Okay. So we now know why we have 4080, and that's because of the amortization they did on the instruments. And that's this figure here, 4080. But we only needed the cash flow that happened during the year on loan notes, which is 320. Okay, we're done with that. Then we have the deferred tax, and deferred tax will make us open a tax account. But before then, okay, let's go on to that deferred tax account. Like I said, open a tax account. Now to make it easy for you, you have your balance go forward for your deferred tax and your current tax. You also have the CD, your deferred tax, and your current tax. The deferred tax brought forward 800 and 15. $800, 15. Then the current tax, we have 725 and 1250. 725 and 1250. In the profit or loss, we have the tax expense for the year, and the tax expense for the year is 1000. We have 1000, and we have a deferred tax as a result of the revaluation gain, which is 650. So let's do the maths. We have 800 plus 725 plus 1000 plus 650, and that gives us 3175. 3175 plus minus 1250 minus 15, that gives us 425. And this is your tax paid. So tax paid of 425. Okay, so we're done with that. The next information we have here is the lease. So for the lease, we're doing something similar to what we've done as regards to the tax. So we have 901.2, and we also have 600 and 750. So let's open a tax account. Sorry, I said a tax account. Let's open a lease account, lease liability account. Again, we have BF for non-current liability and current liability information, and CD for non-current liability and current liability information. So let's pick them again. We have 901.2, 900 and 1.2, and we have 600 and 750, 600 and 750. Okay, then from the PPE account, we have a right of user assets of 1005. So this will give us a summation of 3000. 3000. And this is 1950. The difference should give us 1050. And that's the balancing figure there. Call this the lease payments in the period. And the lease payments, we take it to financing activities. $1,050 financing activities. Okay, so we have the last thing there, which is the government grant, but there's an information. Let's read up on that. So 25,000 was credited to admin expense in respect of the grant, the government grant during the year. So I don't need to open a tier account for that anymore, since that information has been given to me directly. So 25,000 is a non-cash item. We're taking it out. Grant income. And we have it with 25. This will be going out because it's an income. So what we've just done is we've answered the whole question because we're able to touch every item. Of course, I've touched this basically because they gave us an additional information on that. So we're able to touch every item in the statement of financial position. Without doing that, you might likely miss something out in the cash flow question. So let's do some submissions to see if we got the answer correctly. Okay, so the first thing here, we have 3,000 plus 150 plus 400 plus 900 plus 200 minus 225 plus 500 again minus 750 plus 550. Okay, this gives me 4,925. So here I have 4,925. While the cash flow generated from operating activities, of course, minus 320 minus 425, and that gives me 4,180. Okay, this on the other hand, we have this together to be 19 negative, and that gives me cash flow used in investing activities. Again, this one sum this up, and this also gives me cash flow used in financing activities, and that will give me 16 negative as well. So we have minus 19 minus 16, and we have 680, which is the final answer we have here, 6,680 as well. Okay, so that's basically cash flow, how to answer a cash flow question using the indirect method, picking the information from the financial statements one after the other. Now, the operating activities using the indirect method. So bear in mind, again, this is indirect method, and we want to do the direct method now. So just the operating activities will be affected. So operating activities, but this time around using the direct method. So using the direct method, we have to calculate cash received from customers, and we'll be using a receivable control account to do that. We also have to calculate cash paid from suppliers, or cash paid to suppliers rather, to suppliers and operations. Okay, so that would need some workings as well, and then we can be deducting interest paid, which we've already determined already to be 320, and we can also deduct tax paid, which we've also calculated to be 425. So that's not really a big deal. So first thing I want to do, like I said, is to open the receivable control account. And the receivable account, it's an asset account, so the BF will start on the debit side, and the CD here. Again, the BF, let's check out the question. We have 2002 and 2,950, 2002 and 2,950. Now, profit or loss, revenue is a credit item here, so the corresponding entry goes to the debit side on the receivable account, 31,000. So we have revenue 31,000, and this gives us 33,200, 33,200, 33,200 minus 2,950, and that gives us 30,250. Again, the balancing figure here, this is our cash pay, our cash received. So 30,250 cash received, straightforward, 30,250. Now the one that which is usually not straightforward is to get the cash paid. Now to get cash paid, the first thing we have here is inventory account. Now inventory, we have the bought forward and the CD. Again, it's an asset account. Now inventory, the figures you have there, we have 38 and 33, 38 and 33. The cost of sales, we have it to be 21,800. So we can sum up 21,800 plus 33 minus 38 is 25,100, 25,100 minus 38 That gives us 21,300 as our purchase. So the balancing figure. Now, of course, we need the purchase information in the calculation of payable. For the payable, we have the BF starting here and the CD in this side. So payable, what do we have as figures there? 2001 and 2,650. 21 and 2,650. Corresponding entry for purchase that I've calculated is 21,300. Plus 21, 23,400, 23,400 minus 2,650, 2,750, and this is cash paid to suppliers. So the summary of cash paid, we have payables, and payables we have it to be 2,750. We come back to the profit or loss. We have distribution cost 3,450. Distribution cost 3,450. Like I said, we should assume they are paid already. We have admin expense. Admin expense, we have it to be 2,002. Now there are some transactions that are already in this distribution and admin expense which we need to take out because they are non-cash in nature. For example, we have depreciation, which is 900. That's already been included, so we are removing it because it's non-cash. We have amortization, which is also 200. We are taking it out because that's already been included. And something has also been deducted which we need to include back, and that is our grant income, which is 25. So we are adding this back because it has already been deducted. So this will give us the summation we need. Plus 3,450 plus 22 minus 900 minus 200 plus 25,325. And that's the total cash paid, 25,325. So we have 30,250 minus 25,325, and that gives us 4,925. Because if we come back to the other calculation we did there, you can see 4,925 as well. Therefore, we have this to be 4,180, and that's that in respect to the direct method. So we have direct method and indirect method, and we've treated them with this particular question. Okay, so I hope my explanation has made it easy for you to understand it. If you have any question, always drop it at the comment section and I'll be there to answer a question for you. And I'll make sure I drop the solution on the comment section as well, so you could download it.
Now that you're done watching the video, I'm sure it was insightful and it was educational. Make sure you subscribe on our YouTube channel and like our videos, and also share these videos with other friends who might likely have the same exam as you. And I'm sure we'll be seeing again in another session. This is Learning Accounting.